what is going on, everybody? Welcome back to another CYPRX video breakdown, giving you guys an inside scoop into accurate technical analysis week after week. In today's video breakdown, we're going to be giving more insights into where we think the digital asset XRP is going to be headed over the next consecutive couple of days / weeks, going over both bullish and bearish scenarios. Now, in previous video breakdowns, i.e. just a few days ago, when the price of the digital asset XRP was roughly around 50 cents, we had uploaded a video breakdown calling out the 62-cent threshold to the absolute T of a degree, which is where the price of XRP currently stands today. Take a second and listen. Bullish order flow in XRP, one of the first areas of interest that these market makers are going to target is going to be above these intraday highs when the market sold off, just like it did on the rest of these other digital assets, which is where our first significant bullish target of roughly around 62 cents, after the most original bullish target of 50 cents was just met, comes into fruition. So our next bullish target when we get into that segment of today's video breakdown is going to be at that 62-cent threshold. So in that video breakdown from a couple of days ago, when the price of XRP was roughly around 50 cents, we were explaining in detail why we were projecting XRP to trail up into 62 cents, giving you guys logical and sound technical analysis, showing you all that from within inside our private CYPRX community, we had let the members know that we were buying XRP when price was roughly around 41 to 42 cents. Since then, we have seen a significant price increase. So again, make sure that you all are paying attention to these fundamental updates. So first, I'm going to give you guys the inside market update from within our private CYPRX community. We deliver these fundamental breakdowns to our private members in the Discord 6 days out of the week, keeping them ahead of the market fundamentals and making sure that they are finely tuned with what is actually happening in the market. So we're going to read through that, and then we'll head over to the charts, and I will break down some TA levels that I'm personally looking at on the digital asset XRP, going over both bullish and bearish scenarios. So let's start off with this current market update. This is from today. Over the last 24 hours, data across the US front has remained slightly mixed, but a risk-on sentiment persists as digital assets are showing some signs of intraday strength, while other assets across the board have slightly cooled off from their recent bullish runs. U.S. industrial production today posted a solid advance for the second month in June, with a 0.6% increase in production and factories, mines, and utilities, following a revised figure of 0.9% gains a month earlier. Now, this data marks the biggest 2-month advance since late 2021, according to the Federal Reserve data. However, this data did not significantly alter the market sentiment. Federal Reserve Chair Jerome Powell's speech on Monday of this week boosted optimism in risk assets for potential rate cuts due to his dovish tone. Now, market participants overall are more focused right now on inflation and labor market data, both of which have started to show signs of cooling on the U.S. front. Today, Fed Speaker Christopher Waller confirmed that the U.S. is on the right path to start cutting interest rates. His comments align with those of Jerome Powell, supporting the rate cut narrative. Key highlights from today's speech for President Fed Waller included focus on risks to employment sides of things and the Fed's dual mandate. He noted that while inflation has moderated, labor market figures have softened and unemployment risks have risen. Now, despite slightly upbeat U.S. data, the Fed's comments supporting rate cut bets holds more weight, leading to the dollar remaining suppressed as of time of recording this specific video breakdown. Another major factor that weighed on the strength of the dollar and the FX rate is the divergence between the Federal Reserve and the Bank of England. Last night, during London session, the Great British Pound showed some strength during London session, primarily due to the UK's CPI data, which indicated persistent, sticky, and troublesome inflation. This pushed back the sentiment surrounding a Bank of England rate cut, which strengthened the price in the Great British Pound overnight. So while the UK CPI remains slightly elevated, while the US CPI is decreasing, as we saw in previous figures from the past couple of weeks, investors are starting to price in interest rate cuts from the Federal Reserve and not from the Bank of England. So this overall environment has led to investors selling the dollars over the past couple of days and buying the Great British Pound, as seen overnight, especially with the Great British Pound USD rising in value during London session. So overall, this divergence has contributed to some more factors that have led to the dollar index remaining below the key psychological level of the 104, which has also allowed crypto assets to maintain some of their bullish gains from this past week. So overall, the current cryptocurrency market capitalization sits right now at $2.3 trillion, with tomorrow's US data in focus. Key reports to watch on the US data front include unemployment claims, the Philly Fed Manufacturing Index, and comments from FOMC member daily. Now, to see continued dollar weakness below the key psychological level of the 104, higher unemployment rates and contractions in the Philly Fed Manufacturing Index, and along with more dovish comments from the Federal Reserve speakers, are ideal. This would most likely continue to boost rate cut optimism, which we know has been one of the key drivers in supporting risk assets. The labor market data is a crucial factor that will determine the rate cut outcome. Continued cooling in the labor market, if we see it tomorrow, could lead to more dollar selling, with investors hedging against a declining dollar and buying more assets like crypto. So with that fundamental piece in mind, we'll take a break right there and we'll come over to the charts real fast, and I will share with you all my bullish trajectory for the digital asset XRP if we see that scenario where we see a continued risk on sentiment driven by higher unemployment claims showing continued weakness in the US labor market and contraction figures in the Philly Fed Manufacturing Index. So in a scenario where tomorrow we see higher unemployment claims and lower Philly Fed Manufacturing Index signaling weakness and cooling in the US economy, that's most likely going to lead to more sell pressure on the dollar and a continued bullish sentiment in risk assets like crypto. So if we can see that environment unfold tomorrow, and on the digital asset XRP, if we can break above this 62-cent threshold, my next bullish targets, give or take the volume and the momentum that picks up if this level is broken, is going to be that 76-cent range. My ideology and logic behind this is if the market makers are not going to come back, pull price action down, and attack lows, then most likely they are going to attack liquidity that exists above highs. And the next most immediate intraday high, after having just accomplished the 62-cent threshold, rests above the 73 to 74-cent range. Again, in my personal opinion, a move above 62 cents to some degree will result in 76 cents being met. Now, obviously, of course, this is a really bullish case scenario. At the end of the day, if 76 cents is met, any higher areas of interest that we have on our radar for XRP are going to come into that high from roughly around July back in 2023, around 94 cents. So if at any point in time we do see a surge in volume and volatility in the price of the digital asset XRP, we can break above and hold that 62-cent threshold, and we can clear 76 cents, which is our next most immediate bullish target above 62 cents. Anywhere between 94 cents to $1.10 are our next areas of interest for some intraday profit taking. Again, remember that the vast majority of us here at CYPRX are intraday traders. This has nothing to do, and I'm not telling you long-term bag holders to start selling your bags at $1.10 or anything like that. This is just for us individuals that like to take profit and reallocate their capital in market downturns, okay? So keep that in mind. Now, let's talk about the opposite scenario real fast. So I said to the private CYPRX community, conversely, this will be the opposite if tomorrow we see a risk-off market sentiment. If unemployment claims comes out healthy and robust, still showing signs of strength and resiliency in the U.S. labor market, along with upbeat Philly Fed manufacturing figures showing strength in the U.S. economy, this could be a catalyst for a bounce in the DXY strength, where most recently we saw the DXY break down into the 103s, again, coming down below that key 104 psychological level. And if we see upbeat figures tomorrow on the data front, this could be a catalyst that takes the dollar back above the 104 and creates sell pressure on crypto assets. Again, some intraday profit taking across the board could possibly unfold. So if a scenario like that tomorrow comes into fruition, where we do not see XRP create bullish order flow, i.e. higher highs and higher lows above 62 cents, then the next area of interest for bearish targets or a slight pullback is going to be the 52 to 50 cent threshold, i.e. price potentially pulling back down into this area of consolidation for a nice retest. If we can see that come into fruition, we will make decisions there based off of market sentiment, whether we are going to hold this previous higher low at roughly around 52 cents to potentially come back, reaccumulate orders, and break higher if the market mood remains risk on, or at that point in time, if we do see a pullback down into 50 cents to 52 cents, whether the market mood remains risk off and we see further sell pressure on crypto, possibly targeting these lower areas of interest at roughly around 45 cents to 42 cents, right? So just keep that in mind moving forward. Nothing is solidified in this market, and you guys should be changing with the market sentiment and the market tides, not marrying a bias. It is my firm belief that as long as price is above the 50 cent threshold, which I showed you guys in the previous video breakdown, is a historical level. If we zoom out and take a look just over the past consecutive couple of, let's just say, months to over a year, we can see that every single time XRP has broken above 50 cents, we have seen a significant bullish run. However, that run could possibly be materializing and fully coming into fruition if we cannot break above 62 cents, which we can clearly see in the past has been a significant factor in price action. So if we slap on a horizontal ray at roughly around 50 cents, I just want to show you guys every single time historically price has closed bullish on the weekly time frame on XRP above 50 cents, we have seen a significant bullish run. You can see that took place back in July 2023 here in this area. We can also see the same thing, a retest of that 50 cent range, a break above in October 2023 with a bullish weekly close and a move up into roughly around 75 cents. That came back down to test the 50 cent threshold to the absolute T of a degree. Another weekly bullish close on February 24th, 2024, with the move all the way up into roughly around 74 cents. And then again, we pulled back to revisit that 50 cent threshold. And just most recently, we have now broken and closed bullish above onto the weekly time frame yet again, above that 50 cent threshold, which ignited that move into 62 cents where we currently sit at now, right? So you guys have my bullish and bearish targets. Remember, anything above 62 cents in the form of volume and volatility picking up with bullish order flow confirms on the lower time frame, i.e. higher highs and higher lows, created above the 62 cent threshold. We're looking for 76 cents. Above 76 cents, we're looking for 94 to $1.10. And then anything that does not break above 62 cents, we have that 52 to 50 cent threshold on our radar for a possible pullback for some potential re-entries and dollar cost average positions. And anything below that 52 to 50 cent threshold, we're looking at roughly around 45 to 41 cents as our worst case scenario. Many blessings to you guys. I will keep you all updated, just showing you guys devils in the details. We've been calling these price action analytics out to you guys very strategically and very accurately over the course and the lifeline of CYPRX. How do we do this? We utilize institutional delta levels, which all of you have access if you choose to join the private CYPRX Discord. Again, I will just show you guys. Our institutional scalper updates these levels on a daily and weekly basis. As you all can see, the most recent institutional scalp levels and areas of interest have been updated as of July 17th for our private members. These are institutional areas of interest, and no other retail community on the internet has access to them. So if you all want access to them, again, visit CYPRXtrading.com. We would love to have you on the team. So with these targets in mind, pay attention to tomorrow's US data front. Also, next week, we have some very important data with the FOMC release on the table. I will give you guys further updates moving forward. As always, many blessings to you guys. Be cognizant, be aware out there, and I'll see you all in the next video breakdown.